So the governance of microfinance institutions is really coming into focus over the last year, I'd say. And there are a number of reasons for this. One is obviously the overall global financial crisis, which has shown that when financial institutions have poor governance, bad things happen. But in the area of microfinance, it's even more important. We can see in the sector crises, we can see in the failure of individual MFIs that in many cases, governance weaknesses have at least contributed, and in some cases, the research shows have even been like a major factor in why the institution failed or did not perform well. Yeah.
Sorry, if you can be a little louder, I just want your voice to be captured.
All right. Do you want me to start over?
That's fine. I think from now on.
Okay. All right.
Yeah.
All right. Let me think where I was. Hold on just a moment. And what I'm going to say next. From a responsible finance perspective, MFI governance is really important because it's actually in the governance process, which includes not just what happens in the boardroom, but also what's in the legal agreements, the decisions the owners take about the direction of the company. It's in the governance that the double bottom lines get balanced. So when there are trade-offs, for example, a decision that a microfinance institution should really focus on rural outreach, which may have financing implications, those decisions need to be made in the governance, and the owners are basically giving direction to the management about what they think the company or the organization, if it's not a company, what it should do. So setting strategy and overseeing the implementation of that strategy is the main role of governance, as well as protecting against risks. And here we're talking about not just operational risk, but reputation and credit risk. So from a responsible finance perspective, client protection, social performance management, the governance process is quite central. So over the last year or so, on behalf of CGAP, I've been leading some research on the current status of MFI governance, and in particular zeroing in on the role that equity investors can and should be playing in strengthening governance of MFIs. And here are some of the key findings. Well, the research was based on interviews with more than 110 people who are involved in MFI governance in some way or another. So these are CEOs and senior managers. They are the individuals that are appointed to serve as directors on the boards of MFIs. They're fund managers, investment officers, investor association representatives, researchers, and others. So a group that would have had the opportunity to observe MFI governance from lots of different angles. And the key findings that came out focus in three areas. The first area is really about how are the financial and social bottom lines being balanced. And I got at this question by asking each person I interviewed, what are the hot button issues in the boardroom? So what are those decisions that the board needs to take or that management is bringing to the board in the form of perhaps the annual business plan that really involve possible trade-offs in the double bottom line? And the number one answer was growth. So here I think we have a much deeper appreciation as a result of some of the turmoil of the last couple of years, that growth has to be of the right quality in order to really be advancing both bottom lines of the institution. Interestingly, to me anyway, the second main hot button issue was focused on product diversification, and particularly two situations were mentioned. One is the decision for an MFI to go more rural or to stay rural in its orientation. And the second was around offering of small balance savings, because again, the mission benefits might be quite clear, but the financial costs, particularly initially, are also substantial.
I'm
I'll
good.
I'm going to tell them to come back.
Yeah.
Hello. I'm doing an interview right now. Can you come back at 3 o'clock? It's okay? Thank you. Oh, I'm rattling. Wasn't a problem.
Do you want to see where you have stopped last, or?
I think I've just finished on that.
I think you completed your sentence.
I think I completed my sentence, yeah. If the knocking won't be.
I think it's okay.
I think it'll be all right.
Yes,
Yeah. The third broad area where there were apparently debates in boardrooms was around responsible finance issues, and especially the question of product pricing. So we had this trio of growth, product diversification, and product pricing were really the main points that were mentioned. Then there were some other issues that were rising on the agenda, and these include compensation of executives, they include profit levels, profit allocation, and how best to bring more commercial investors into the company's structure, and how social investors can exit responsibly. So it was interesting. I think these suggest the points of debate now and into the future. And these are the kinds of questions, very concretely, that governance is dealing with currently. A second main area of finding was in terms of how well investors themselves are performing in their governance roles. So we found that very commonly an equity investor would insist on a board seat. They wouldn't always fill it, and when they did not always fill it with a person with the right qualifications. And even if they managed to get someone with the right qualifications, making sure that the person was consistently there and able to devote adequate time to the governance of the MFI, not just jetting in for the board meeting and then jetting back out. These were each areas where investors themselves and also CEOs and others reported that there were some weaknesses in terms of active and effective governance by investors. Probing a bit further on the question of investor effectiveness in MFI governance, another area that came up is passivity. So are the directors really willing to push back when necessary on management, be sure that key assumptions are being tested, reality checked, that independent information is brought to the table when necessary to make sure that a strategy is really sound and appropriate. And I think there's a lot of concern about boards micromanaging MFIs, but this research suggests that the problem is more the opposite of boards being a bit too standoffish and hesitant to be forceful in their decision making and in questioning the management. Part of the reason for this that was reported is that many MFIs are still led by their charismatic founders, and this affects both who's on the board but also the culture of the board and to what extent the organization is very management driven. So I think this suggests another area that needs work in our field, and where investors could play an important role by making sure they're appointing well-qualified individuals who really are briefed on what it is they're expected to do and are willing to vigorously exercise their fiduciary responsibility to do the best thing for the MFI. And the third area that we looked at was reported weaknesses overall in MFI governance. So in addition to the points that I've already mentioned, there are some areas where it appears that our industry lags a bit the other sectors in terms of corporate governance. So there are often reported confusions around what's the role of the board, what's the role of management. So clarifying roles and responsibility between implementation and oversight is one area that needs attention. Another area that needs attention is policies around certain governance issues, such as conflict of interest. A third area that needs attention is committee structures. I mean, realistically, in a 4-hour board meeting, you can't delve with sufficient depth into all of the strategic issues that are affecting the MFI. And so having fuller developed committee structures that actually carry on that work and bring the right kind of expertise, whether it's focusing on the audit and financial management function and control function, or the social performance function, or the human resources function, these are areas that were particularly identified as needing more of a formal structure in terms of committees. I need to pause for just a minute because there was one other point I was going to make. Oh, yes. Very importantly, many of the respondents that I interviewed indicated that oversight of social performance management, or what some call social governance, was another area that really was ripe for more attention. And we see, I should say, in each of these gaps, we see some promising examples of real progress on MFI governance, often supported by investors and the owners of the company. So I think it's encouraging that that the field is beginning to make progress. And overall, the sense was that the trend line was going up in MFI governance. There were just many opportunities to make it still stronger. So I guess that's the last point that I would end on, is that currently there are quite a few initiatives in the governance area across the microfinance sector. So we have, for example, the work that the Social Performance Task Force has done, that the SMART campaign has done, that Cerise and others are engaged in to strengthen governance on the ground and articulate guidelines for improved MFI governance. We also have some work specifically in the investor area. For example, the Council of Microfinance Equity Funds is working now to improve the management of all kinds of risks. And so they're developing essentially checklists that boards could use to get them thinking broadly about not just the traditional risks, but also things like mission drift and reputation risk. So as I look forward over the next few years, I think this will be an area where we make a lot of progress.
Good. Yeah, great.
All right, so it's a lot of, you can edit that down, I think, easily, but
yeah, I think it's good.
It gives
We've got
enough.
lots of gist, yeah.
Okay.